Welcome to this week's Market Update, where we cover what moved markets, what drove our performance, and what we're watching in the days ahead. Let's start with the consumer. Retail earnings this week showed households are still spending. They're just being choosier about it. Back-to-school sales ran nearly 20% ahead of last year, and one major chain cut prices on more than 11,000 items to meet shoppers where they are. With consumer spending making up close to 70% of the U.S. economy, and economists forecasting 2.1% growth this quarter, the engine is still running. In bonds, the U.S. Treasury announced it will at least double its buyback operations for longer-dated government securities, adding a fresh source of demand. Long-term yields dipped, then settled with the 30-year around 5.26% and the 10-year at 4.71%. Those are historically attractive levels. For our clients, that means real income today plus room for prices to rise if yields eventually ease. That announcement also rippled outward. The US dollar fell to its lowest level since mid-May, and research analysts at one major global bank dropped their cautious stance on longer-dated bonds, while flagging opportunity in gold and higher-yielding currencies. It's a good illustration of why we hold bonds, stocks, and diversifying assets together, rather than betting on any single outcome. Now let's look at what drove our performance last week. Merck was our standout, up 14.5% on the week, including a 12.6% jump in one session. A late-stage trial of a personalized cancer treatment, paired with Merck's flagship drug Keytruda, hit its main goal, showing real improvement in keeping high-risk patients cancer-free. That matters because it starts to answer the biggest question investors had about Merck. What comes after Keytruda's patents expire? Healthcare was our strongest sector at plus 0.33%, and the strength was broad. Eli Lilly rose 5.07%, Johnson & Johnson 4.81%, Amgen 6.29%, and Pfizer 7.34%. The whole sector had its best single day since April 2025. This is why we hold healthcare. Dependable earnings from products people need, combined with genuine upside when innovation delivers. Our value strategy led all quantitative styles at plus 0.24%, drawing from two very different sources. Pharmaceutical names benefited from the innovation story, while energy holdings were supported by firm crude prices. ExxonMobil gained 3.81%, Chevron 5.57%, and ConocoPhillips 3.26%. When higher bond yields pressured expensive growth stocks earlier in the week, value picked up the leadership baton. Looking ahead, here's what we're watching next. Wednesday brings core PCE, the Fed's preferred inflation gauge. The latest reading showed prices up just 0.1% month over month, below the 0.2% expected, with the annual pace at 3.3%. Continued cooling would strengthen the case for rate relief, which tends to support both bonds and growth stocks. Also Wednesday, updated U.S. growth figures. The last estimate showed the economy expanding at 1.5% annualized, down from 2.1%, but the details were encouraging. Consumer spending accelerated to 3.2%, and residential investment rose for the first time in 6 quarters. That's an economy moderating, not stalling. And Friday brings Canadian GDP, which matters for our domestic holdings. The last quarter was flat, with household consumption up 0.4%, while a 2.9% rise in imports weighed on the headline. Much of that went into business inventories, which was enough to prevent a second straight decline. As always, we stay focused on what matters most, helping you reach your long-term goals through disciplined investing. Thanks for joining us, and we'll see you next week.